Welcome to Leading on Risk, a Lockton professional and executive risk video series, in which we share insights on the risk topics that matter most to your business. I'm Rachel Medak, a managing director in Lockton Professional and Executive Risk Group. There are hundreds, if not thousands, of companies currently waiting in the wings to go public, and their boards and risk professionals naturally have lots of questions about what will change from a private company to a publicly traded company and how that will impact them. We'll explore these and other questions during this episode of Leading on Risk with Mach Millett, Lockton Professional Executive Risk's Chief Innovation Officer and Alternative Investment Practice Leader, and Eric Blanchard, a partner at Cooley LLP. Let's get started. Welcome, Mach and Eric. The IPO market is fairly clogged right now. We know that there are many companies that are waiting to go public. If you're one of those companies that's currently in the waiting for that, you want to make sure that you're prepared from a legal, an accounting, and a risk insurance standpoint. So starting with Eric, what is the process for getting ready for an IPO from your standpoint, and how long does that process typically take?
Absolutely. Well, just to start with how long it takes, usually it takes about 5 to 6 months from the time that you kick off the organizational meeting with your investment bankers and lawyers and really get the team moving. It involves a heavy lift of drafting the registration statement for U.S. companies. It's a Form S1. For foreign issuers, it's a Form F1. Basically the same, has a lot of information about the company, requires a lot of discussion and editing of the business section with the investment bankers. The underwriters conduct fulsome due diligence, and which will involve lots of meetings with management, preparation of a data room, and the company will have to apply to list its shares on a exchange. And the exchange has its own work streams and processes for approving that application. So because it's so much time and effort goes into this process, and there are so many work streams that are going off, simultaneously, our general advice is that companies should start planning between 18 to 24 months in advance of the IPO so that they're ready to hit the ground running, and that the anticipated timelines and marketing windows that the banks will line up will be something that will be achievable, and there won't be undue stress on the process and the timeline with some of these work streams. The one that I'll highlight, it's always the long pole in the tent. It's the preparation of the audited financial statements. For the S1, you'll need generally 2 years of audited financials. Typically, the audit is done on a public company basis just in time. So you generally see the audit happening as the registration statement is being prepared. So our recommendation is to really focus on that and get the right advisors and folks lined up for it.
Great, thank you. And Mach, when you think about a company's D&O insurance program and that timeline and process, how does that line up from your standpoint when you're looking at the insurance side of things?
So I couldn't limit myself to one answer to this question. I have 3 answers to this question. There is the best case scenario, which is that you start similar to what Eric was describing, about 18 to 24 months out, because there are things you can do to your private company D&O policy on a renewal that ease the process of transitioning to public company D&O. So 18 to 24 would be great. More typically, we get about 6 to 9 months, perhaps, and that still has plenty of time for the process. And our process really consists of taking the S1 that Eric mentioned and the investor pitch deck, using that as the public company D&O submission, then having underwriter meetings, perhaps one meeting, perhaps several, depending upon the situation, with insurance company underwriters to understand the risk. Then a lot of work on your broker side to really have further discussions with those insurance markets and tighten up the language, tighten up the pricing, what have you. And then a discussion between your broker and the key stakeholders at the company, the board of directors, the executive team, outside counsel, to make sure that everyone's on the same page in terms of a recommended program. And then you actually go out and bind the coverage and put together the program that everyone wants. My third answer to the question is it can be done in 7 days if you really need to. And I know this from experience because we had somebody come to us 7 days out from the IPO date saying, that they had forgotten about D&O insurance. So it can be done very quickly, not ideal.
Understood. Thank you. I think we've all been there. Eric, when you think about companies going public and ahead of that, what are some of the legal concerns and potential pitfalls that we want to have companies avoid on the front end of an IPO?
Sure thing. One of the major pitfalls is publicity. Some of the more high-profile cases of companies being hung up in their IPO process involve undue publicity about the company. And when I say undue, the registration process for an IPO is heavily regulated from a communication standpoint. So anything that can be viewed as conditioning the market, or even, frankly, as directly as mentioning the IPO, can create a delay in the IPO process and create liability for the company. So we have a great deal of flexibility nowadays after the Jobs Act from 2012 to continue to operate on an ordinary course basis from a communication standpoint through the 30th day before the initial public filing of the registration statement. But companies should be mindful of press releases, social media, and interviews, and make sure that when they start to get into the IPO process, not just at the org meeting, but even before, that they really understand the do's and don'ts, and they run through that with counsel, really starting at that 24 to 18 month time frame to really understand the kinds of publicity that will be allowed as part of the IPO process. Another concern that companies should give a lot of attention to early is board composition and other governance structures such as multi-class structures, which will involve high voting stock. We see that a lot with technology companies, biotech companies, not as much. But the considerations around structuring the board, how it will look post-IPO, and then also the governance and, in some cases, multi-class share structures. Those are long lead time events that will require a lot of focus and attention at the board level and, in some cases, the shareholder level.
And that's a perfect segue, Mach, into our next question about some of the risk concerns that come front and center for the board and the insurance professionals and executives ahead of the IPO. What are things that people should be mindful of from a concern standpoint when you're thinking about that?
Sure. Well, it's a fundamental transformation of your risk as a company, going from private to public, particularly from a directors and officers liability standpoint. So the whole point of the public company D&O policy is to protect the personal assets of the officers and directors, but also to protect the corporate balance sheet of the company once it goes public. So there are things like roadshow coverage and what have you that are specific and necessary for when you're going through the process. But then the big moment of exposure is when you actually, price and list. And at that point, you're starting to worry about, sure, SEC regulatory exposure, so SEC enforcement actions, we still see plenty of those. Shareholder class action suits and derivative suits against directors and officers alleging that they have breached their fiduciary duties to the shareholders in the company. Those are the three main risks, and we build the D&O insurance around that. I think all of the stakeholders need to understand what these risks are. Sometimes an executive team can have a very different opinion from an experienced board member about what an appropriate program looks like. So important to make sure that everyone's aware of these risks, understands them, understands the reality, which is that in a given year you will see the plaintiff's bar file somewhere between 180 and 220 class action suits. It doesn't really matter what the stock market is doing, what the overall economic situation is in the country. It's a business. So there are these lawyers sitting out there waiting to see a stock drop, and if they see one, then they will file litigation, or even if there's not one, they might come up with a reason for it. So again, 180 to 220 cases a year, almost every year. So you have to be ready for that.
Agree, and I think we all have seen from our own experience the publicity piece that Eric talked about is key. The number of claims that we have actually seen that have arose from that type of allegations ahead of the IPO they are front and center.
Absolutely. And Eric, I think your point about sort of coming up with a communications protocol is tremendously important. We certainly prefer if there's not a lot of side information going out there as well. It clouds the whole process.
Agreed. And Eric, outside of the communications protocol, what other legal support do you think is best provided and given to companies from folks like yourself ahead of an IPO?
Sure thing. And I will pick up on, I do like hearing folks other than we lawyers talk about how active the plaintiff's bar is for public companies. And it's certainly part of our talk track as well. And I think as you start to think about how legal advisors play into the IPO process, we're really threaded through the entire process because of that. Ultimately, the IPO process is really a well-orchestrated stock trade that once a company is public can happen over the course of days and sometimes hours. But really the IPO process is about preparing that initial set of disclosures and insulating both the company as well as the underwriters from just that liability from all of those lawsuits. And in order to accomplish that, really falls on the company counsel in particular, but as well as the underwriters counsel in the IPO process to really guide both sets of constituencies, both the company and the investment banks, through that and through the disclosure considerations that arise over the course of the transaction. So as a result, we as company counsel generally play a lead role in overall coordinating all of those work streams. Most of the work streams are legal in nature. There ends up being very few, real business work streams. We'll manage the registration statement. We'll conduct the discussions with the stock exchanges and file the applications with the exchanges. And in addition, sophisticated IPO counsel will also be able to bring to the table knowledge of SEC positions on disclosures. Sometimes there's some pretty arcane lore that the SEC provides only in the context of comment letters on other IPOs, as well as in conversations and telephone calls with SEC staff over time. And we have access to folks who have knowledge of a real longitudinal history of the way that the SEC laws have been, SEC guidelines have been interpreted by the SEC staff and implemented in the context of an IPO. We also have a very deep knowledge of the way that investment banks think about their documentation, including their underwriting agreements, but more importantly, things like lockups. Lockups can be quite bespoke, particularly for technology companies and companies that have large groups of shareholders who have been holding on to shares for quite some time. And in that context, some lockups can be fairly nuanced and require a lot of structuring with the investment banks.
Great. And Mach, from an insurance broking standpoint, what support should we be thinking about that we're providing our clients, similar to what Eric is doing on the legal side? What support are we expecting to give our clients?
So, Eric, the reason why I bring up the litigation rates is because I used to be a securities class action defense lawyer. So it's near and dear to me, and that's what this coverage is really for at the end of the day. I think similar to choosing your outside counsel for an IPO, choosing your broker is tremendously important. You want to choose a broker who is experienced in doing these sorts of transactions, who has the expertise underlying to sort of understand what the risks are and how to cover off against them, understanding the interplay between policy language, premium, and retention. Sometimes people go for the lowest retention or the lowest premium without understanding the trade-off that you sometimes get from that. So I think it's very important in terms of broker selection, and then the question becomes, how do you choose a broker and what do you want from that broker? I think a conversation like this is actually really important, but more specific to the client, of course. Talk about what are the risks, what is the coverage, how does the coverage actually work, what does it do, what does it not do? Because there are exclusions, there are exceptions to this coverage, that it will not extend to certain types of behavior and what have you, and it's important to make sure that everyone understands what it is. For me, it's experience and expertise in public company D&O and in IPOs, not just D&O, right? Mm-hmm. Because private company D&O is very different. So you may have had the same private company D&O broker for a while, but they may not be your best partner. So I think a good first step is to reevaluate whether or not you're with the right broker and walk through things like, okay, what is your experience with these transactions? How many have you done? How have claims played out? How is your claims advocacy group in terms of helping us through those claims? And God forbid that something goes wrong once we are public, How much experience do you have helping us through those sorts of situations, whether it be restructuring, bankruptcy, or a claim situation?
And part of that also is making sure that we are setting up a client with the proper carriers that will have claims paying abilities, because in the likelihood that you do have a claim, you do want to be also with a carrier that is partnered with it, is going to pay your claim.
Sure. I do think when you are talking to someone to a broker about what sort of program would you build, it's important to talk about markets and understand which carriers have good claims paying reputations, good financial strength ratings, good underwriting, folks who actually understand the deal that they're underwriting and aren't sort of doing it from a naive capacity perspective. And then I think another good test is to test out brokers' data analytics, because one of the biggest questions is how much D&O insurance should we buy for an IPO? And a good broker should have a lot of benchmarking, but also actually concrete data analytics that they can show you to explain why you should buy the program that they're recommending.
Eric, what kind of high-level recommendations would you offer companies that are preparing for an IPO?
Well, I guess my top recommendation is hire the right broker.
Appreciated.
But other than that, I think my best advice is to just start early. I think you've heard that as a common theme from me. We think that you should start hiring advisors at least 18 months out from the IPO, including Counsel, and then start to review the various work streams and the items that are really bespoke to your particular company at about that time, just so that everything is really mapped out. Really, it's looking overall at the time frame, starting from when you want to go out for whatever reason that is, thinking both before as far as preparation and then afterwards as far as considerations for being a public company. What sort of news are you going to put out to investors after the IPO so that you can really be comfortable telling that overall story as part of the IPO process?
And I think, Mach, we've seen when we have clients that have gotten that advice on the front end of this process, it shows in the D&O underwriter meeting, which then shows and translates into the program that you've put together. In addition, what other recommendations from the broker standpoint would you offer companies that are getting ready for an IPO?
So I'll return the compliment and say it's incredibly important to choose the right counsel, certainly. And I would echo what Eric said about starting early. I think that's important. The other thing I would say about starting early is it's about who you involve early as well. On the D&O insurance side, I think it's really important to include all the stakeholders. So make sure that the board of directors is involved. They don't have to be involved in the day-to-day discussions, but you may find 3 months into the process that your executive team has a very different idea of what an appropriate insurance program looks like.
Or the cost of it.
Exactly, compared to the board. So you want to measure people's risk tolerance, cost tolerance, but also gain the experience from board members who have been on other public company boards and have something to share about what that experience was like. And if they had litigation, share that as well with the other decision makers. Mm-hmm. Outside counsel is definitely an important part of the key stakeholder group as well. But I think you want to walk all of those people through what are the major risks we're facing here. Like I said before, what is D&O insurance and how does it work? Because not a lot of people actually know that outside of the brokerage community. And make sure that everyone understands the risks that are being taken on and how you can protect against them and how much, at the end of the day, you should probably be buying from a limits perspective and what that's likely to cost. So you can map all that out well in advance, and then as you go through the process, nobody's surprised. And so you get to the end and everyone's on the same page instead of having what I've had many times, and I'm sure you have too, a board meeting where we present the executive team's recommendation for a D&O program for an IPO and the board says, absolutely not. We're going to buy more Side A. We're going to buy more personal asset protection. So involve everybody from the beginning, and it goes much more smoothly.
Great conversation today. Thanks, Mach and Eric, for joining me, and thanks to all of you for joining us. For more insights from Lockton, subscribe to our YouTube channel, follow us on LinkedIn, and visit our website, lockton.com.